Hey everyone, welcome back to the Web3 Daily. Let's talk about what's been going on in the market. Bitcoin's been cruising sideways for the past 24 hours, just hovering around the 120k mark. No big moves. Kind of feels like it's waiting for someone to make the first move. Ethereum, on the other hand, is on fire, shot straight up to 4.7k this week, with a 30% pump. You can feel where the money's flowing. Binance Coin's chilling at around 830. Nothing too wild, but Solana stole some spotlight with a 12% daily gain. Knocking on the door of 200, XRP's been grinding up too after that lawsuit settled. It climbed to 3.25 and saw trading volume more than double. Big wallets are clearly loading up again. Feels like a day where the majors are in control, and the mid-caps are just catching the wave. Bitcoin still center stage, but just standing there, arms crossed. Now let's talk about that OKB pump. When I first saw that chart, I was like, yo, this isn't random. Something's up. Then, bam, official news. OKX announced they're phasing out the OKT chain, and everyone holding OKT will get converted to OKB at an average rate. On top of that, they're burning over 65 million OKB and the lock-in total supply at 21 million. That's not just a narrative, that's structural support. X went wild. Some KOLs are saying OKB is going full BNB mode. Lock, burn, repeat. Others are calling it the new dark horse among platform tokens, especially with OKX pushing hard in Asia. FOMO levels were off the charts. One post literally said, if Bitcoin can't start the bull run, OKB will. But of course, not everyone's buying the hype. Some folks pointed out the potential regulatory risk. If OKX is serious about an IPO, they might need to downplay OKB's role or reposition it entirely, especially in the US. So there's this tension between bullish price action and regulatory uncertainty. My take? This was mostly emotion-driven. Yeah, the news was strong, but this market's been dying for something to go all in on. BNB's too big. LDO's old news. SOL's shaky. OKB had the right size, solid structure, and then boom, announcement hits. That said, don't forget this move wasn't built on slow accumulation. It was a blast off. Could retrace hard if traders get jittery. If you're aping in, know what you're buying. Don't just get hypnotized by the green candles. Now, let's talk about Ripple. Big development. Ripple and the SEC have officially dropped all appeals. The case is over. This is the XRP security case that's been dragging on for years. Now it's done. No penalties, no restrictions, just a clean wrap. And the market loved it. XRP spiked to 3.25. Up about 4%. But more importantly, volume exploded. We're talking 12.4 billion in 24 hours. That's not noise, that's big money flowing in. Some dormant wallets from last year even started moving again. Definitely looks like they were waiting for this. But this win isn't just for Ripple, it's for the whole industry. It shows you can actually fight back and win. With Gensler under pressure and the SEC clearly overreaching, this feels like a turning point. People are already whispering about a regulatory shift heading into election season. We'll see, but the market clearly feels it. So yeah, I'd call this a clear bullish event. Short term, XRP gets fuel. Mid-term, funds start allocating more confidently. Long term, the US regulatory climate might finally be warming up. Honestly, this might be bigger than an ETF approval because it's not permission, it's precedent. Speaking of politics, Trump's back at it. He just said crypto should be part of 401k retirement plans, literally framed it as the future of wealth freedom. That line alone sent the US crypto crowd into a frenzy. And then just to top it off, Treasury officials started hinting the Fed might slash rates by 50 basis points in September. Not a rumor. Official channels. So now you've got Trump talking crypto, the Fed possibly pivoting, and the Treasury giving nods. Combine that, and yeah, it's not hard to see why the charts are flying. Bitcoin's holding strong. Ethereum's exploding. Solana and meme coins are all riding the wave. It's not just a bounce, it's a macro tailwind. My view, this isn't just hype. If 401 plans can allocate even 1% to Bitcoin, that's trillions in capital coming into the space. This isn't just bullish for tokens, it's bullish for crypto as a global asset class. I'd call this a structural macro catalyst. Big if true, but even the narrative alone is strong enough to spark a new leg up. Now, this next one caught me off guard. Pantera just invested 300 million into a bunch of crypto vaults. I thought they meant custody solutions. Nope, these are full-on on-chain asset managers. They stake, they LP, they reinvest. The goal, grow token count. not just price exposure. BitMine Immersion is the standout, holding over 1.15 million ETH, worth nearly 5 billion, and they're claiming returns of 330 ETH per unit in the first month. Maybe some marketing magic there, but still clearly working. They're not playing the price game. They're compounding yield like a hedge fund, but on-chain. When I saw that, I thought this is BlackRock, Citadel plus smart contracts. That's exactly what some institutional investors are looking for. No memes, no tokens to research, just the yield with transparency. Pantera backing this isn't a hype move, it's a thesis play. If this vault model works, it could replace a chunk of centralized finance. And if you're hunting for the next big thing, this sector might be where it's hiding. Quiet, smart, long-term capital, just how the next Uniswap gets born. And then we've got the universities. Yep, Harvard and Brown are officially holding Bitcoin ETFs, specifically BlackRock's IBIT. Over 116 million from Harvard, and 10 million plus from Brown. Not rumors. Filed and confirmed. This isn't just some one-off allocation. They've been scaling in over time, and it's not just them. Wisconsin's pension fund is also in holding both IBIT and GBTC. Combined, that's over 100 million. So what's this mean? It means the moment ETFs got approved, institutions had their doorway. No more excuses. They're in. And the IBIT is now the biggest spot Bitcoin ETF on the planet. 86 billion in assets. All spot. No derivatives. Just coins locked. To me, this news is low-key but heavy. It won't cause a pump, but it changes the floor. Bitcoin's no longer priced just on hype. It's priced on allocation. And that shift, just getting started. Then there's Kwon. Yeah, the Terra guy. He just pled guilty in New York. Wire fraud and conspiracy to commit fraud. Official. Done. This goes back to 2022, when UST collapsed. Kwon fled to Singapore, Serbia, Montenegro, finally got caught. And now the US has him. The plea confirms he faked data during the crash, told the public UST was algorithmically stable, when in reality he was propping it up with hidden market support. This guy fooled everyone. Jump. Galaxy whole DeFi projects got wiped. The fallout was massive. UST was 50 billion at its peak. Now he's looking at up to 25 years in prison, but with cooperation maybe 12. This doesn't move the market, but it's a warning. The era of fake algorithmic stability is over. No more Luna 2 dreams. If anyone's thinking of building another one of those, they better remember Kwon's doing time. Finally, Circle just dropped a bomb. They're building their own layer 1 called ARK, a chain purpose built for stablecoins. No more relying on Ethereum. They're going full vertical. ARK uses USDC as gas, runs a native FX engine for stablecoin swaps, and supports enterprise-level finance, private transactions, fiat reals, custom settlement. It's not just a chain, it's a financial OS for institutions. Circle also posted crazy strong earnings. Revenue up 53%. USDC supply up 90%. ARK's going live next year. If they pull it off, this could be a real competitor in the payments layer. The stablecoin wars are about to enter a new phase. Not just who means the most, but who owns the infrastructure. So yeah, keep your eyes on ARK. Could be a sleeper hit. Alright, that's it for today. The market's heating up, but it's still under control. The majors are leading, smart money is positioning, the music's starting, but it's not chaos. Whether you're in or out, stay sharp. These bullish headlines are real, but they can flip fast. Manage your risk. Don't let FOMO drive your trades. See you tomorrow.